there's many ways that your business may be able to, take advantage of this. So speak to one of our consultants at the NJSBDC and to see, if you can start your own clean tech company. So that being said, our next one here. So the SBA Administrator Guzman announced a new pilot program to bolster cybersecurity infrastructure for emerging small businesses. So for this one, you don't have to technically do anything. This is more for the states. SBA is going to give, hopefully, New Jersey has to actually apply for this, but they're going to award states who are eligible $3 million in grants, and the states would then have to create some type of program or what have you, or also make it another grant to help small businesses fight against cyber attacks and threats. Now, the third one here. This one's I mentioned on Tuesday, but NJEDA is accepting applications for the Aspire Development Tax Credit Program. And this is actually pretty relevant to today. So the Aspire program is helping to advance new housing and commercial development projects throughout the state. So let's see if we could find how much. Okay, so I can't seem to find where it says how much the tax credit program is for, but we're going to drop the links to all these articles into the chat and go ahead and read them at your leisure. So the last one here is a few legislation signed by Governor Murphy. Again, I mentioned this on Tuesday, but these were the 5 that are probably most relevant to small business. I'm not going to read them out, but you have them here. All of the legislation signed is a very, very long list. So if you want to take a Sunday, with some hot coffee, and some patience, go ahead and go through these, but we tried to comb out the ones most relevant to small business. So there you go. Oops. But that's about it for our headlines. So for today's webinar, there's only 2 things to keep in mind. I'd love for everyone to type your questions into the chat box. Or into the Q&A. If you have a question that you want to ask anonymously, the Q&A gives you that option. Number 2 is please complete a 3-minute survey. Once the webinar is over, you're going to get redirected to a survey. Once you complete that, you'll get access to webinar materials and a recording of this video. That being said, I want to welcome Jorge Aviles, Capital Team Consultant at the NJSBDC. He's going to show you today how does small business commercial funding work in the new year. So let's go ahead and bring him on. George, can you hear me?
Yes, I can.
All right. What's up, man? How are you?
Good. How are you?
Good, good. All right, so I'm going to go ahead and stop sharing my screen and you can take it away.
Okay, so welcome everyone. And by the way, this is my first webinar that I'm teaching. So please
bear with me.
Bear with me. So they asked me to do a class in commercial financing and so forth. So I figure what's the best ways to really talk about what changes has happened after the pandemic. We'll get into a little bit beforehand, a little bit after, and what we have seen in the changes. So you all know I'm a licensed real estate advisor. I've worked in business banking, I have a BS economics, minor in finance. I worked in Wall Street. So I do a lot of commercial and residential real estate. Here's a little bit of my background. So you can see that I also went to St. Peter's College, it was a college, so that tells you how old I am, but now it's in a university, so I'm probably a dinosaur. So let's get into this. Types of commercial real estate, and what is this webinar and how it applies to? It applies to office buildings, retail spaces like strip malls, whether it's a large one, a small one, or a standalone. Industrials will be your warehouses, multifamily rental buildings, hotels, and mixed-use buildings. That could comprise of just retail and residential, whether it's one retail commercial place on the bottom and one on top, or two or three as a mixed use. And that's where, if you're in North Jersey, you see a lot of mixed use. For example, Union City, West New York, North Bergen, Jersey City on the Hudson County area, and some in Bergen County as well. You see a lot of that in Elizabeth and the urban areas, where you'll see a commercial store in the front, and then on top you have one or two apartment buildings. That is what is considered a mixed-use building. What has changed? Well, before the pandemic, you were pretty much around 20 to 25%. I would say mostly 25%. Some of the riskier buildings wind up doing 20% funding. Now it's gone up to 30 to 35% on your commercial financing. So minimum down payment on all your properties that you're buying now on a commercial, no matter what type, they're going to be asking for 30 to 35% down, and that needs to be liquid. You're going to have to show proof that you have those funds right away. Rental buildings must show proof of payments, copies of canceled checks, money orders, and cash payments. That would apply mostly for a lot of your warehouses, industrial, or your rental buildings. You have rental buildings, let's say 10, 20, 30 units. What's happening is now the bank is asking and wants them to know if you got paid during the pandemic. So they could go back a year, year and a half to make sure that you have proof that you received payment, because during the pandemic, there's a lot of people that weren't paying their rent. So the banks are trying to mitigate their risk and try to reduce that as much as possible. So they're asking for proof. So even though you're the buyer, you're going to have to make sure that the other party has all the documentation. Also, to seller to provide bank statements. That's another thing they want to make sure. So when they're looking at the numbers, if you're saying the income on that property is $200,000 or $100,000 as an example, we have to make sure on a monthly basis that that money was being deposited. Hence, backs the second part of what I said was proof of payments. They want to make sure that you can provide proof on anything that you're buying. We want to mitigate risk. We want to make sure that the income that we're stating is correct, and you didn't see any losses during the pandemic, which we all know. The state had referendums. We had a lot of people not pay. Some people did deferments or modifications on some of their stuff. So therefore, you're going to run into some of these issues. So you definitely want to make sure that whoever you have as your agent and the other parties that you're working with is able to get some of this information. I wouldn't wait until the end, because if you're almost at the end of this process and you find a property, you're doing a 1031 exchange, you're going to run into issues if they cannot fund it. Now, if your bank is that lenient, then you will overcome these issues. But that we have not seen.
Can you give a little bit of info? Sorry, can you give a little bit info on the 1031 exchange? I know maybe some participants here don't even know what that is.
Okay, so 1031 exchange is basically used to defer tax payments on any income that profit that you received on a property. It's basically on investment properties, not on your personal. So let's say you hold it for 10 years, you have a profit, you bought it for 100, now you're selling it at $500,000 to keep it easy numbers. You have a profit of $400,000. Normally you have to pay taxes on those $400,000. Now, we're kind of like stepping away from how your accountant wrote it off if you have any depreciation and all of that stuff. But we'll leave that for another, because that's more complex and that's more on the county aspect of your taxes. But let's say you did have a pure $400,000 profit, and now we have to pay taxes. If you want to refer those taxes, now you do a 1031 exchange. It's basically a company that's handling the transition with the mortgage company, with your title company, and your attorney, to make sure that we show what the profit was there and it's put into an escrow account. You have to identify another investment property. You have 6 months to close. That's why a lot of investors on a 1031 exchange will look for 10, 15, 20 properties, even though they're not going to buy them. That gives them enough time to try to do their due diligence, do their homework, look at the income, look at the expenses, to make sure that it qualifies. If you find a property, now you're able to go to the 1031 exchange company, and now you start doing the process of that. They handle all the legal work and also the paperwork with the government, so you don't have to pay taxes, IRS, and so forth, and they give you all the documentation. You have 6 months to close it. You close it now. What happens is you're deferring that income, but then also the purchase price on where you brought your property changes. So therefore, you kind of extend your taxes and lower your price points of when you brought it to what you have it. So people do this like every 5, 10 years. Once in a while, they'll 1031 exchange the property, and they keep on deferring the property and keep on the income coming in. So that's the good thing about it, that you didn't pay taxes on $400,000, and now your purchase price has changed also on the new property, and you're keeping that for 5, 10 years until you decide to do a 1031 exchange again or do a sale. So it saves you paying taxes.
Awesome. So being that it's a tax strategy, we recommend everyone obviously talk to your accountant. We are not accountants or lawyers, but it exists, and anything that avoids paying taxes sounds good to me.
Yeah, that's a good one.
Legal ways. Let me put that out there.
So multi-family loan requirements. A lot of the banks are now requiring 85% physical occupancy, 70% economic occupancy. They want to make sure that if you have mostly occupied, usually it was 3 to 5% occupancy rate, vacancy rate. Now they're adding sometimes a lot more as far as the percentage of the vacancy rate, but they want to make sure that if you're going to invest in these properties, that it's physically occupied by 85% of the units. Tax and escrow insurance monthly deposits are required. Your replacement reserves underwritten at minimum $250 per unit annually. So what does that mean? They want you to have a reserve on some of these properties. So on a 10-unit building, you're looking at $2,500 minimum on an annual basis. But once you have a 50, 100, or 200-unit building, those numbers get a little hefty. Recourse, non-recourse with standard exemptions of fraud and misrepresentation can be waived at 100% restriction properties. Commercial space, maximum 35% net rentable area, maximum 20% of efficient gross income. Require reports, appraisal, property assessments, phase 1 environmental. Phase 1 environmental is basically you're able to see any oil or any chemicals on a property, or you're able to smell any odors on any of these properties. Phase 2, it gets a little more detailed, and it could get expensive, and phase 3 as well. Phase 3 would probably be more like a cleanup and so forth. And that is done with the state, and that is very costly. So most of your gas stations, auto mechanics, and those type of stuff, or unless you're going to do a new construction project, then at that point, that's where your phase 2, phase 3 might come into place, and that gets very costly with the purchase, and it's considered more soft cost than actual hard costs. Repayment, yield maintenance, and other kind of prepayment options are available, and they're suitable subject to approval at 1%. Those are just some minimum requirements that I saw on a lot of the banks that are asking for. So packaging your deal. This is like a very standard sheet that the banks use, or your loan officer will be able to use. Has borrower's information, phone number, property address, what type of property? Are you buying a multifamily and mixed use commercial property? Is it owner occupied or not? How many residential units, how many commercial units, and what's the estimated value? Then they're looking at the loan amount, what type of program, what type of rate. And they're gonna look at your base rent, reimbursements, incomes. Now, when they look at income, some of the property management companies charge you for parking. Some of them might have laundry, you need to pay for that. So that's income as a owner for that property. And then also your effective gross expenses and so forth. And I have an example of one here. So Mr. Randy is looking to buy 1455 Liberty Ave in Jersey City. It's a commercial property. There's only 4 units. This is a small one, value 630 to 650. And he's giving a small percentage down. So his loan's going to be 472,000. So what we're looking at is your annual monthly rents. So on 4 units, he's getting monthly 6,856. You multiply that times 12, that's how we got 82,272. Depending on where you're at, some banks will look at the averages. What's the average in Hudson County, Bergen County, Middlesex, Sussex County? They look at your base rents for 1, 2, and 3 bedroom apartments. So now you have your total gross income of 82,272, less factoring 5%, 4,113.60. Like I was stating before, they're deducting your vacancy rate. Usually it was 3 to 5. Now they're more at 5, but some banks are giving a bigger vacancy rate, and they're deducting that money from your income. So therefore, your effective gross income is 78,158.40. That's an example. Now this sheet here is it's key to buying and getting your property funded. This is what is a good rule and a good sheet to use if the property that you're going to buy, it's going to be able to get funded. Because at the end of the day, how are you going to put the package together? This is the key right here. So you're looking at real estate taxes of 20,400, insurance is 6,000, utilities. If everything is separated, and if you'll still have some common charges for your utilities. Water and sewer, you got to keep in mind certain towns charge you for sewer, water as well, and your reserves. You have your management fee, which is 5%. That could be any type of property manager or even a private property manager. Repairs about 1,200. There's no superintendent because you have a management company. Elevator, this is not, it's only a 4 unit, so you don't have anything there. And then you just have some miscellaneous. So your total expenses are 36,500. So what they're going to estimate is your property and money and insurance is 2,626 to 32 cents, excuse me, times 12 gives you 31,515 total. And then that comes out to, they're going to take that annual NOI divided by the annual principal, and then you get the DSCR, which is 1.32. What is DSCR? That's your debt to service coverage ratio. That is what a bank is using to see how much you have. They usually want between 1.25 to 1.3. So this is a little bit above the gray line. So therefore, if it was a traditional bank, this loan would be probably declined. If they're a little flexible, third-party lender, they probably would approve this type of loan because it's not too far off. So what you're looking at is how much income do you have in the properties you're buying, whether it's a warehouse, a strip mall, rental building, you need to add that. That's why you also have to look at what other resources you have. So if it's an industrial building, I saw someone who had I believe it was an auto body. So let's say that person who has an auto body, does he have extra space to rent out for parking? That would be income that you can add. So you want to have all that type of stuff in there to increase your income. The other thing is you got to look at your expenses. One key thing, your highest expenses will be your taxes and insurance. Commercial insurance is a lot more expensive, so you definitely want to shop around. And actually from New York to New Jersey, it's there's a big difference. Your sewer and water, not every town charges for sewer, but now a lot of towns in Hudson County, because it's densely populated, are charging you for the sewer line. So you have to add your expenses there. Not all properties, utilities are separated. So you have common charges, and if you only have one, and if this is a commercial building, and you only have one boiler and one furnace, then you're going to be paying for all the utilities. So you have to make sure you know your mechanics are up to date, and therefore you could get energy sufficient items so that you could lower your costs on that. So once you have your expenses, which was 36.5 minus the 78,518, that's how we got the annual net income. And then divide that by the payments, which we showed you there, that's how we got the debt to service coverage ratio. So going into buying a property, I think this sheet here will help you decide, am I going to get approved? Is this a good purchase? Also, you got to keep in mind, you're no longer going 20 to 25% down. Now you're going 30 to 35% down. So having those key items might help you really have a more educated consumer mentality in purchasing and picking the properties that you're looking to invest as an investment person in commercial real estate. And if you're trying to put your property in there to run your, so it's owner occupied, it gets a little better for you. Now you do have different type of products. This is a general loan spreadsheet, and a lot of banks will use this, but then you have different programs like an SBA loan, which will be a little different. Obviously your interest rates are different. So depending on the type of product you're buying and you're using on your loan to buy your commercial property, it's going to vary. And that's it.
All right, let's jump into the chat box. We have a few questions. Just bear with me, guys. There was a ton of action in the chat. But while I'm looking for it, I do have two questions. One is, what types of lenders are out there?
Well, you have third-party lenders, and you have your main banks. So Bank of America, Valley National Bank. Actually, Valley National Bank is a very good commercial bank. Lakeland Bank also is big into commercial as well. So, and you have third-party lenders, private lenders. So you want to work with a bank. If you have a business relationship with a bank from my business banking days, and you held good credit standing and you had favorable account balances, you should try them first. But if you don't see that, then you want to try a commercial bank or a third-party lender.
And who would be a third-party lender?
Third-party lender is a mortgage company. For example, NJ Lenders, they're mostly residential, but they do some commercial. There's a few out there. They're a little more different. You could Google commercial lender, third-party lenders. And basically what they do is they work with multiple banks, smaller investors. They have private loans, private investors who are funding these type of loans. So those are the ones who are a little more less lenient. Even on the residential side, it works the same way. They're a little less lenient. You have to look at working with one of the major banks. It's like a 8x10 sheet, a blank 8x10 sheet. And if you go off the line, that's it, you're declined. Here, they're a little more favorable. They're a little more flexible if you went into the gray section. So therefore, sometimes you want to look at both options. Now, interest rates do vary, but nowadays with how business has gone more commercial, more global, it's easier. There's not much of a difference on interest rates. It's only like half a point, some even a quarter point, and sometimes only an eighth of a point. So definitely you want to look at where it is, but commercial is always more expensive than residential loans.
Awesome. So what are maybe some creative ways to fund a deal? And again, I want to put this disclaimer that we do not recommend
Right.
any type of way of funding
Yeah. You
whatever
also,
we're go ahead, go ahead.
there's that's a good one. You do have hard money lenders. Hard money lenders charge you anywhere from 12 and up. So that's your
They're
worst
risky.
scenario.
Those are risky,
They're
right?
very risky. You'll see that where your hard money lenders want basically to make sure you have at least 70 to 75% in there in equity. They don't lend just to anybody. Also, it's more for short term. It's like about a 1-year loan. Your interest rates are higher. They do charge you points up front. It could be anywhere from 1 to 3 points on the hard money lending. So you have to be careful with that. That is used for the people who like to go into flipping houses, for example. You're buying a 2-family, it's going to take you 3-4 months to put the project together. So people will get into that short term, finish the project, do the renovations, and now they're able to pay the loan. And they show equity because they're going to get a higher return on what they're putting in. But that's only used for 3-4 months because it could cost you a lot. The other thing is private funding, where there are groups that lend to their online. There's now some online internet companies. They're really small, and basically they lend to companies. They do like crowdfunding and stuff like that, but on the commercial aspect. So that's a little different too. Interest rates vary there as well. And they're selective. They're selective on it. Each one might say, I only do warehouses, industrials. Some are more rental building focused. So you have to see if there's a niche to what you're looking to buy, and there are funding. Normally on the commercial side, you're a more affluent person or someone who's starting out. So if you don't have a lot of funds, you're definitely going to have to go in the SBA 7A route in that format.
Awesome. So next question after that. Well, actually, let's go through some of the chat questions, and then I'll get to my other one. So Terry asks, are there any programs that are specific to the restaurant or entertainment business?
For real estate, specifically, no. It's just all general. There's nothing there. There are grants right now for the restaurants. I know Uber but that's just more not for purchasing real estate. It was more for grants, and I think it was $10,000 to $20,000, and it was part of Uber and some of the other distributors of food in the restaurant industry that's coming out. There's a grant for that, but to purchase real estate, no, not specifically. There's nothing for entertainment in that.
Gotcha. So, Terry, we have the NJSBDC has a capital team, and what we do is we help basically prepare small businesses to apply and acquire grants and loans. You have to be eligible to get consulting from a capital team. So ask us the question if you're eligible. Capital.team, I believe, capital.team@njsbdc.com. All right, so going down the chat here. I have a follow-up question from Terry. What if the building is not income producing / vacant?
The other one is a problem.
You can't prove to the bank that it's going to make money.
Because that's where the debt to service coverage comes in. We want to make sure, the reason why they want to make sure that you have enough income is that just in case you don't have the income, at least the property is producing income to pay the loan. So that's why you see a lot of small business owners buy a mixed use property. So it could be a 4 or 5 family or even a 6-unit building. You're looking at 1 commercial on the bottom and anywhere from 3 apartments to 5 apartments. So what happens is, on an average, let's just say you're getting $1,000 per month on rent. That's if it's a 3-family on top, you got $3,000. If it's 5 units, you got $5,000. And if your mortgage was anywhere to $300 to $4,500, that money from the rental incomes, it's covering the property payment, the mortgage payment. Your business, if it's struggling, now you're only putting a few dollars from your pocket to cover the mortgage, but you're also kind of living rent free if you're able to do that. And that gives you time to take your business, pivot, and take it to the next level. So, or weather the storm so that you could be making extra income and you really are in the black. But normally, if all the units are in the building is in the red, as far as expenses, it's going to be very difficult for you to purchase it with minimal down. You'll have to put a lot more money than 30, 35%. They're going to probably ask 40 to 50% down. And at that point, you know, in a commercial building, the average commercial building, you're looking at 600-700 in North Jersey. You know, South Jersey, you're looking at $500,000, and I'm talking about a standalone. So it's a decent amount of money. Yeah.
So I want to help out. Well, I'll help you claim this. So house hacking is a thing, but can we make it commercial building hacking?
Right.
You live rent free, you make money from the other units and potentially from your own business.
Correct. That's commercial hacking, and that's the ideal. If you could put your business in a mixed-use property, run your business, rent out the other units, you're going to cover your expenses and your mortgage. But then now your overhead for your rental piece, you're saving that money in your business. So like he's talking about a restaurant, if you're to house that, you know, you're not paying $5,000, $6,000, $7,000 rent. That's money that you could use for your other overhead, whether it's utilities or employees to run your business. So, and if it's a big enough unit, you could also live there, work there, and now you're living for free. So you kind of, it's a balance out. It's learning how to balance it, and it's a different lifestyle if you really want to do that type of stuff.
Awesome. So we have Yogesh. He asks, if I want to buy a MFG business with building, maybe you know what MFG is, but he asks, who should I contact at SBA?
Manufacturing, he's talking about a manufacturing building and SBA. Well, my advice is you want to work with a commercial broker, number one. Usually your commercial brokers, you know, we could recommend you some people, but definitely look to see who's doing commercial. I wouldn't go to the big commercial outfits. They deal with the $30, $40 million properties. So you want like a small brokerage company that does commercial. They should have contacts and they can put you with someone at the bank that can help you out, get funding for the property. And then from there, from the SBA route, we could see what requirements have they changed. And then this way you could fund your property.
Cool. All right. Terry asks, for new businesses, are we using a 3-year projected income scenario, income versus expenses?
Depending on the bank, yes, that is happening. Amortization, it's 15. They do 10 years too as well, depending on the type of loan. So usually on residential, it's a 15 or 30-year loan. They take everything out. On commercial, they amortize it and they do 10 or 15 years and they have 20. Obviously, the shorter period of time, the higher the payment. But the bank's going to work with you. Some banks use the Fed fund rate or they use a LIBOR rate. They're all depending on the bank and the type of loan that you're getting in. So everything changes. And also depending on the bank that you're working with, the scenario is going to be different. Not every bank has the appetite for what you're looking to buy. There's very selective banks who don't want, let's say, gas stations, dry cleaners, in those type of business because there's chemicals. That's when you run into the environmental. That's why it's very expensive, the insurance, because if there's an oil spill with the state of New Jersey, it's super expensive. It could run you hundreds and thousands of dollars just to clean the property. Right now, I know of a project. It's a residential building. They have about $500,000 to $700,000 in cleanup because they had a leak there before. So it could get expensive. That's one of the most expensive things that you want to look at. And the most important thing you want to look at is the environmental report on anything you're buying, whether it's a small property or a big commercial property. You always want to know if there's an environmental report.
Good to know. Andrea asks, Does NJ Lenders focus on commercial properties? I want to purchase a small office building with an apartment.
Yes, I do have a contact there, and I could get you in contact with a person that does. It's a small division. They're mostly residential, but they do commercial.
Yeah. Just keep in mind, have to say the disclaimer, NJSBDC does not endorse any particular company, but these are just opinions, and you are still, you still need to do your own due diligence.
So,
All right, going down the chat. Yolanda, you asked for the Capital Team email. So I'm going to ask our webinar assistant to plug that in. I believe it is capital.team@njsbdc.com. So we'll drop it into the chat just to confirm that that is the one. All right. Joanne asks, I'm a brand new business running it out of my home. How do I become eligible to receive a grant/loan, something to get myself into a possible storefront? Her business model is sustainable and eco-friendly in Montclair, New Jersey.
okay, so right now, my advice is to ask your rep to get you in contact with all the different type of programs and grants that we have going on right now. I know as of now, to get a real estate loan, they don't have any grants. But what you can do is, I know on the residential side, certain towns give grants for first-time buyers. What you need to do, let's say for the city of Irvington, the city of Newark, the city of Trenton. So what you could do is call the city and find out if they have housing programs and so forth, but then ask them, do they have something on the commercial aspect? On the commercial side, it's a lot more difficult. They tend to feel that the business owner should be able to fund their property. So I have not, till this day, I could be wrong, have not seen a grant on the commercial side for real estate purchases. But I would say try the city to see if their urbanization zone, if they look a redevelopment zone, and they're trying to help those small businesses in that area, and maybe they might be giving a grant. I know for a fact they're gonna start something for homeowners who own properties and they were behind if they didn't get payments, I believe up to $35,000. That is going to be running soon, not sure when it is. I know it's in New York and New Jersey, but that's if you owned a property building of 5, 10, 15, 20 units, and you didn't receive payments on some of your rents. Don't know all the logistics and the details and how to qualify for that, but that's going to be coming out. That's going to be through the state of New Jersey.
Awesome. All right, so we have Lemuel asks, I have a commercial property that is soon to be foreclosed on. Is there any assistance for me?
One I just said.
Perfect.
You could get that grant. They're going to give you $35,000. Now, the other thing is with the foreclosure process in the state of New Jersey, it usually takes about 8 months. With commercial, it might be a little quicker because it is commercial, but normally it takes about 8 months to get to the point where they're going to put the state, well, the bank could file with the city, the state, and then start doing all the legal work to get you evicted and get you out. But you have to, I would talk to an attorney, definitely talk to your attorney first and try to see if they could delay the foreclosure process. If you could get that grant or come up with money, then you're able to stop the foreclosure and you could bring yourself up to date. The other thing is maybe talking to the bank and see if they're willing to do a commercial modification, which basically they would take the money that you owe and put it at the back of the loan, and therefore you're saving the building. The only thing with that, with the downside is if you're back dated $100,000, now you're adding that plus interest, attorney fees, and penalties. So if you owe 400, you're going to be at over 500,000 plus. So there is a negative to that if they do that. But once again, it's depending on your bank, case by case basis. And I know if you're trying to refinance, it's going to be a little difficult because a lot of banks are going to pull your credit and they're going to want to make sure that you're up to date with your current mortgage. So you'll probably have to go third party or a hard money lender. And at that point, you're digging yourself in the hole and it might not be a good idea.
Awesome. All right. Sita asks, do you need to have a perfect credit score?
No, you don't need to have a perfect credit score. Normally, you're looking around a 680 FICO and up. So it is like a little different than personal. Before the pandemic, FHA was 580. During the pandemic, it went up to 640. Commercial was around 640 to 660. You're still in those ranges. So, but you always could clean your credit up and you could get a loan. But they're not that strict. You don't need like an 800 or 750, but you're definitely over a 660 FICO.
Awesome. I thought they actually they didn't look at personal credit score when it comes to commercial.
Yeah, they're looking because your business worthiness comes from your personal side. So
right.
The way the banks see it is, if you're not paying your personal, why would you pay your business? Because that's the first thing you go out the window. But it also, they look at your credit, they look at your personal, which drives your business, but then also they look at the numbers on the properties that you're buying to make sure that you have that income. They want to make sure that it's funded because a property could be funded, but then if you got horrible credit, they're not going to give you the loan.
Mm-hmm. All right. So I believe you mentioned something related to this, but Charles asks, need information on program to purchase warehouse building.
There's no programs right now to purchase warehouse building. Right now, warehouses are in a high demand. We're short from anywhere from 10,000 to 30,000 square feet. You won't find anything in North Jersey. They're very expensive. You're looking at 2, 3, 4 million. South Jersey is where you got a little more land. What we're seeing is some people buy land and they're putting warehouses in there because it's a good business. There's such a big demand that we need them. A few years back, you saw a boom in the urban areas with new lofts and condo buildings. So a lot of those warehouses were knocked down. They're no longer there. So a lot of those small businesses had to redirect themselves to another location. But there is a big demand for warehouses. So right now, it's very competitive and it's very expensive. You're looking over $200 a square foot easily. And to lease, depending on where you're at, $30, $18 to $30, depending where you're at. Some places even more.
Wow.
Yeah, no, it's expensive. You can't find anything.
Wow. Yeah, and that would be
holding warehouses right now. You're sitting on gold. Let me tell you. You could rent them, you could sell them, you get top dollars, and people will pay because we're shortage.
Yeah, turn it into a third-party logistics company.
Oh, yeah.
We're all look the trend, guys. We're going online. People need places to store products and ship them out.
Yes.
I will 100% tell you that if you make money from that, make me a partner.
Yes, that's the business to get in. You can sit back and just collect checks. You don't got nothing to do.
Yeah. All right. So Michael asks, can we buy commercial bank properties? I'm going to assume you're saying bank-owned commercial properties.
Foreclosures, you look bank-owned foreclosures. The commercial ones, those are, you have to go direct to the banks to see if they have non-performing assets. Residential, you do. There are some websites that you're able to get them, but you don't hardly see too many foreclosures on commercial buildings. If they're making money, they shouldn't be foreclosed. Very, very, very rarely you see one being foreclosed, but that would be more directly with the bank. You'll need to find out. The way to go is pulling the tax record, who was the owner of the property, see what bank they had the loan with, and then contacting the bank to see if they're willing to provide the information. The other thing is you could go to the county and see if they're being foreclosed. You could get the information there. And then at that point, it gives you the information of the attorney for the bank, and you could contact the bank. But at that point, you're not really getting a discount. The bank wants its money. So they're trying to get top dollar for it. Yeah, but at least you get the asset, and that's what's important.
Just like everyone, we all want top dollar for everything, right? No matter who it is.
Remember, people, the bank never loses.
Yeah, yeah. But on terms of the foreclosure properties, could there be a situation where a property gets foreclosed on, but it was because of maybe the person that had it was using it for a business that doesn't work today, and maybe it can be turned into something else?
Yes, that happens. That could be happen. To me, businesses flourish depending on the owner and also location. So you could have had a business that now it's obsolete. Things are changing, technology is changing. That's why you always have to be a little technical advance and change your ways of doing business. And even now with the pandemic, we all had to pivot how we do business and how we represent our clients and how we work with them. So you have to change. But yeah, a property could have been used for another use, no longer working, and now they converted. Back in the days, we were talking about warehouses a few minutes ago. Nobody wanted warehouses. Now you can't find them. So the use of these assets changed with times, and then businesses also changed. So therefore, just because a business didn't succeed doesn't mean your business can't succeed in that property. All depending on the owner.
Yeah, Michael asks, are there any websites for that? Finding foreclosed commercial properties?
No, there are no websites. I mean,
LoopNet? You can't find any LoopNet?
CoStar, what we use and we jump on, is just addresses of the assets. It doesn't tell you whether it's being foreclosed or not. It tells you if it's being leased for rent, and if it's off market. It doesn't say specifically if it's being sold. It'll just give you the information if it was, just if it's there. That's the tricky part with commercial. And then even all those databases that we have on the commercial aspect side, not all of them are complete. They don't give you all the information, and sometimes the contact information is incorrect. So if you see an abandoned commercial property, once again, I would say it's better to check the tax records, check the county to see if they're there, see who the bank is, and then reach out to the bank that way, or reach out to the owner, see if he's willing to sell. And sometimes the owner will tell you, oh, I'm losing it, and they could give you the information to the bank and you go directly that way. But commercial foreclosures are much more difficult to find because there's not that many, and there are no websites that are dedicated to that. And the websites that are dedicated to commercial don't really focus on that. They're just focusing on some of the other information.
Gotcha. All right. So Charles asks, I have a strip mall and 2 single residential properties. You're doing well, Charles. And looking to develop it into a 30-unit mixed-use property. Please advise.
Advice? Nice. I worked on a 52-unit in Mattawan. So that right now, if it's already there, you're gonna have to. So my advice for that is you need a good attorney that knows how to get those approvals with the town. You're gonna have to get a good architect. Therefore, because that's gonna be your soft cost. You also have permits. So the first thing is to realize what are they approving in that town that you have this project in. That's number one. Then you're gonna need an architect to design it and to make it very friendly for the community, and that's gonna be an improvement to the community that you're gonna be doing. Because if you go in with a crazy idea, I wanna do X, they're not gonna approve it. You have to be something realistic and something that's gonna improve the town. So therefore, you're not constantly going back and forth to try to get your plans revised through the architect so that you can bring them in front of the boarding plan and getting them approved. Because the longer it takes, the more money it takes you. So that's advice number one. You want to definitely get a very good GC who's going to build this for you, and then work with a good real estate agent who could get these, if they're going to be condos out, or if they're going to be rentals, to get you secured in there. Once the asset's fully leased, then it's going to be valuable, right, long term. So there's a couple of steps to it. It's a little more complicated, but that's a great project if you can get it done.
Yeah. So again, the capital team is here. The NJSBDC, we have consultants that will help you with all these types of situations when it comes to your business. You can work one-on-one. We only have these webinars to give you a little sliver of what we know, but I would recommend speaking to an NJSBDC consultant. Again, it's no cost. SBA is giving it to you. Your taxes pay for this, you know? So yeah. All right. Next question, Alami. She says, I own a warehouse in Jersey City, currently half renovated. I spent my own funding, but I need further money to finish up the work. Could you please refer me? Says, please refer me to a lender because I failed to, I guess, to find a lender. I would say reach out to your NJSBDC consultant.
Send me an email. Put my email. I'll find you a mortgage person who could probably help you find some money on the commercial website. You know, you definitely want to do your due diligence. It's a warehouse, so they'll have to look at what's the value and how much equity is in there. And then obviously hold all your receipts on everything you did on the money you put into the property. So this way you could show that you did capital infusion. And that will count as, some banks, depending on the bank, they'll consider that's your kind of down payment, your injection into the property. So that's the best way to go about that.
So I saw here somewhere in the chat about a small business lease grant program. Again, I would recommend to talk to an NJSBDC consultant, a capital team consultant. They're going to have the most up-to-date information on grants and loans. And you get to speak to them one-on-one on your specific pain points. So that's the best route I would advise you to take. Yolanda asks, does NJSBDC provide services that help with small business credit scores? If we qualify for capital consulting, would they aid with that? I can't make any promises. So NJSBDC gives a lot of guidance. We can't do anything for you, but we guide you into the right directions. We point you to the right directions. Do you have anything on that, George?
Yeah, and I mean, talk to your once again, you got to talk to the capital team. We all have contacts where we can help you with someone with credit repair and helping you with that. Credit is key, no matter if it's residential, commercial, and whether it's a purchase of a warehouse or a building, or if you're looking for a line of credit, banks are going to look at your credit. So definitely you want to keep your credit about 30%. So for example, if you have a credit card for $1,000, your balance should be about $300. So you want to be usage about 30 to 35%, no more than that. So if it's $5,000 credit, you want to be around $1,500 balances. So as long as you keep that, that's number one. And number two, make your payments on time. Those two key points will help. They're about 70% what make up your credit score. So that will help you long-term with that. But if you need further that, talk to someone on the capital team. They probably can put you in contact with someone for credit repair, and that can help you out with that. That's my advice on that.
Awesome. Let's see. Michael asks, are there any no-doc loans that we can qualify for when making a purchase?
That only exists on the residential side, not on commercial.
Gotcha. All right.
Those were the good old days. We're not there.
All right, Michael, asking for a phone number to our organization. So we do have a phone number, but the best way to reach out to us and get to a consultant as fast as possible is by registering with us online. We put the link into the chat, and I'll show you later on in a couple slides, but it's njsbdc.com/request-counseling. Charles asks, how can we get George's information? We could put his email into the chat. But again, we do recommend you going to capital.team@njsbdc.com, or you could also visit our landing page for the Capital Team, njsbdc.com/capital team. All right, you're getting a thank you. Carla says, this is very informative. Great job, George.
Thank you.
All right.
Hopefully I learned something.
Awesome. So I have one last question. We have about 2 minutes, and is how do you stay competitive?
So when you say competitive, in what fashion? In any type of business, or to try to purchase a property?
Yeah, in getting a deal.
In getting a deal. So number one, you want to have good credit. My advice is that if you have the funds and you're buying this type of property, if you have the 30%, give a good portion up front. And remember, when you give a deposit, it's going to the attorney, it's going into escrow. Obviously, you're going to do an inspection report. If it's structural or environmental, you're able to cancel your deal. So your funds will come back. The other thing is work with a bank that is known in the industry. So this way it shows credibility. Also, by putting your deposit up front and having a good pre-approval, it shows that you're serious about that you want to buy this property. The other thing is waiving contingencies. It's not like a residential property, and commercial is a little more riskier. So you got to be careful what you do. You have to make sure that you feel comfortable. But if there's something that it's, that it's good, that's okay. And never waive the appraisal. Never waive the appraisal. You don't want to get hit later on and buy a property for $1 million and it was only worth 700,000. So you got to be careful with that. But I would say that's how you stay competitive, is showing that you have the funds, showing that you're serious, having a good bank behind you on your pre-approval, and that should help you. And then also timeline. Timeline will help you get a deal done too. If you're going to do your due diligence in 30 days versus 90 to 120 days and closing the deal quicker, that will help you too. If you are in a competitive situation with another person, I would say that will be my advice on how to be competitive and to win. And then also work with someone who knows their real estate information. So then this way they can be aggressive and they put you first. That's the most important thing. I'd say that's it.
Awesome. All right. Well, thank you, George. Super informative.
Welcome,
Yeah,
Chris.
let's
Thank you for hosting. And
yeah,
I
let's
hope
give George a thank you here on the chat. Yeah, absolutely. All right. Yeah, you're getting very insightful. Both of you did a great job. Well, thank you. Yeah, thanks everyone. All right. So next week we have John E. Harmon. He's founder, president, and CEO of the African American Chamber of Commerce of New Jersey. He's going to come on next week to show us how they're helping small businesses. You can go ahead and register for that. Just point your smartphone camera, pull up the camera. You don't have to press anything, just point it at the QR code. It's the little thing on the right. A link is going to pop up. Click that link, and that's going to be the page where you're going to see all of our events. Go ahead and register through there. I'll leave this up for another 2 seconds. All right, and that's it for today. Again, we are the NJSBDC. We've helped over 13,000 plus small businesses grow their business with no-cost small business consulting, training and events starting at $0, exclusive small business resources. Please register. It's no cost. njsbdc.com/request-counseling. Again, thank you, George.
Welcome. Thank you. Have a great day.
All right. Have a good one, everyone. See you next week.